Visa tumbles as the Genius Act unleashes stablecoins. Amazon and Walmart vie to replace Visa's and MasterCard's stranglehold on payment networks. Or are they? Have retailers finally found a way to bypass the toll enacted by Visa for every swipe of the card? Or is this just a short-term blip for the high-margin cash flow machine? Visa is down over 6% this week. Is there fire to this smoke? Welcome to The Quality Investor. On June 17th, the Senate passed the Genius Act. This legislation provides a framework for non-bank entities to issue payment in stablecoins, creating potential competition from digital currencies that can bypass traditional card networks. Retail giants like Amazon and Walmart are exploring stablecoin-based payment systems, which can threaten the dominance of Visa and MasterCard by reducing interchange fees. This was the impetus for Visa's drastic market decline. However, the legislation has yet to pass the House. The path there is uncertain because the House has its own version of the bill called the Stable Act, meaning a reconciliation bill will be required for passage. I'm not going to opine on the legislative process, but Congress can be unpredictable. It does seem the hit Visa took in the market is a signal that Wall Street believes the bill will pass by Trump's August deadline. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. For the sake of the video, let's say Amazon issues their own stablecoin. This will allow customers to pay with digital wallets, bypassing Visa's network interchange fees, typically 2 to 3% per transaction. Blockchain transactions are cents on the dollar, giving a marginal boost to Amazon's operating income. This will also give more ecosystem lock-in for Amazon as it integrates stablecoin across Prime and AWS. Additionally, Amazon would almost certainly require its third-party sellers to accept stablecoin as a condition to sell on Amazon. If Amazon and Walmart go this route, which they certainly will, estimates suggest this will save the two largest retailers $14 billion annually in credit card fees. So, on the surface, this seems quite bearish for Visa and MasterCard. A dire outlook, to be sure. Visa has benefited greatly from its duopoly with MasterCard in the payment processing space. Both enjoy sky-high margins and both generate massive compounding free cash flow. Because of this, both have consistently outperformed the S&P 500 over the years. But Visa didn't become a payment giant by just resting on its laurels. No, it has adapted over the years to an ever-evolving fintech world. And one such adaptation is a strategic move to integrate stablecoin into its payment ecosystem. Yes, Visa partnered with Circle in 2020, the issuer of US dollar coin or USDC, to expand into stablecoin settlement and payment card initiatives. This was aimed mostly at businesses, think those third-party sellers. In 2023, Visa expanded its stablecoin settlement capabilities to the Solana blockchain alongside Ethereum to improve transaction speed and scalability. I've linked a few sources in the description if you want to investigate further. All of this is aimed at one thing: competitive positioning. The partnership counters the threat of stablecoins bypassing traditional card networks, Amazon or Walmart issuing their own stablecoins. By integrating USDC, Visa remains relevant in a digital currency-driven future. This also provides a new revenue stream for Visa as it taps into new markets, like crypto businesses in unserved regions in Africa, to grow and maintain transaction volume. This will also counter Amazon's issuance of its own stablecoin by providing merchants an alternative stablecoin payment option, as well as competing on speed and cost. This may even convince Amazon to partner with Visa, which, in my opinion, seems more likely than competing directly with them. I also think there is another reason Visa has an advantage long term. and that is credit card rewards. Consumers love their rewards, and it remains to be seen if proprietary stablecoin payment alternatives can match or exceed this benefit. Stablecoins typically lack comparable reward systems, offering low fees but no cashback or points. While an Amazon stablecoin might save merchants 1 to 2% on fees, consumers may prefer Visa credit cards for 2% cashback or travel perks, making it harder for stablecoins to displace card networks unless they replicate similar incentives. A 2023 survey found that 60% of consumers chose their primary card based on rewards programs. The psychological appeal of rewards, allowing consumers to gamify their spending habits, will be tough for any alternative payment processing system to overcome. While Visa has dipped in the market, has this dip been enough to justify adding more shares to the portfolio? Let's dive in to Visa's valuation. Looking at Visa's share price, they closed on June 20th at $338.50. And you can see since June 11th, when the Genius Act news really started ramping up, they've taken a bit of a tumble. Since that day, they're down 9.3%. While Visa is up year to date by over 7%, it has been a rocky ride in 2025. Visa has been nothing short of a juggernaut. It has consistently increased its revenue, gross profit, operating income, has paid a very good and increasing dividend. It's a very capital light business. You can see the capital expenditure is minuscule compared to the operating cash that they generate, and they buy shares back at an amazing clip of over 2.5% per year. Visa is a fundamentals dream for investors. On a 10-year basis, Visa has returned 17.3% annually. So even on a 1-year basis, they're beating that, right now sitting at 23%. However, prior to the news, it was over 30%. Visa also has incredible margins. You can see that their gross margin hovers between the 80 to 82% range, and their operating margin, while taking a bit of a hit in the COVID year 2020, has rebounded and is now over 66%. Their free cash flow margin has also steadily increased over the last 10 years, sitting at 54.5% on a trailing 12 basis. But the real star here is the return on invested capital. Visa's capital-light nature means they don't have to reinvest heavily back into the business to generate increasing net income. And that has resulted in an ever-increasing ROIC and ROCE. On a trailing 12 basis, their ROIC is at 56.85% and their ROCE is at 35%. So you can see on a fundamental basis, Visa is set up wonderfully to handle potential threats to its dominance. It still is up to Visa to adapt to this stablecoin world that we're entering, but Visa started adapting to that over 5 years ago and is well positioned to be a very important player in the stablecoin payment system for years to come. These are my 10-year growth projections for Visa for bear, base, and bull scenarios. But looking at their 5-year historical CAGR, you can see the amount of transactions processed has grown at 11% per year. Revenue per transaction has remained flat, but their various revenue segments here, service, data processing, international transactions, and other, have all grown at over 10% per year, signaling a very reliable business. But let's look at this client incentives. This is the rewards program. This is actually a contra revenue account. And while it has grown 17.4% per year over the last 5 years, meaning Visa is paying out to consumers 17% more per year, this is a deduction from revenue. But going forward, on a transactions processed basis, I have them growing on a bear case at 7%, on a base case at 8%, and on a bull case at 9%. Revenue per transaction growing at between 1.66% and 1.72% per year over the next 10 years. Basically, this is going to be slight increases in transaction fees. And ultimately, total revenue growing on a bear case at only 5.5%, on a base case at 8%, and on a bull case at 10.2% over the next 10 years. Very conservative growth rates here. And a large part of that is because these client incentives, what Visa pays out to consumers for rewards, is growing slightly faster than the rest of their revenue. You can see here my year one estimate, I have them paying out $15.5 billion in rewards in fiscal year 2025. Right now, their trailing 12 operating margin is at 66.5%. So for the bear case, I have that growing to 67% by year 10, 68.5% on the base case, and 70% operating margin by year 10 for the bull case. Ultimately, this means I project free cash flow growing 6.7% on the bear case up to 12% on the bull case. A large part of that is hitting these free cash flow conversion targets, $1.05 for the bear and $1.10 for the bull case, which would ultimately translate into a free cash flow margin here of 58.4% on the base case, something that is easily achievable for Visa if they continue to execute. They have many individual quarters over 60% of a free cash flow margin. So Visa goes into the weekend at a share price of $338.57. And like I said, a PE ratio of 34 and a forward PE of 31.9. Both of these are higher than their 5 and 10-year averages. On a DCF basis for the bear case, I have them at $253.76, $323.80 on the base case, and $403.39 on the bull case. I mentioned earlier Visa pays a very good dividend. Over the last 10 years, that dividend has grown at 18% annually, and over the last 5 years at 15.7% annually. So for the dividend growth rate over the next few years, I have it growing at 12% annually up to 15% annually for the bull case. So that gives us a dividend discount bear price of $346.41, $436.11 for the base, and $571.68 for the bull case. Even on the base case, there's slight upside for Visa right now at 7.25%. And if they execute phenomenally and hit their bull numbers, they have 36.5% upside. We need a margin of safety. Without any margin of safety, I have a buy price for Visa at $368.67, which it was hovering around right before this Genius Act passed the Senate. And with a 10% margin of safety, that buy price comes down to $331.81. So Visa, in my view, is still a little bit high. In fact, I would probably want it to come down to about $320 before I'd be comfortable adding a little bit more to my portfolio. But I think this is a short-term blip for Visa, as they've demonstrated in the past their ability to adapt to the ever-changing market. They're incredibly well positioned to deploy capital where they need to be competitive in the stablecoin driven future. And while this is just my opinion, I do think it's more likely that Amazon and Walmart would rather partner with a Visa or MasterCard rather than compete directly with them and thus integrate these payment systems. All in all, I think Visa is a wonderful business. I think it's well positioned to grow long term, and we're getting to a buy price where it's going to be attractive yet again to add to the portfolio. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.